Hi everyone and welcome to today's morning report analysis videos on Wednesday the 1st of March with me, Rich Pair Market Analyst at Adtech Markets. We've got strong markets actually, dollar strong move and also equity markets. That's coming in back of a couple of factors really, but the main driver has been this improvement in the treasury yields, which ultimately has been driven by Fed speak. We've had the 2-year which has burst higher, and it's added sort of 14 basis points just this week alone pretty much, and that's sort of coming as the Fed speakers are increasingly hawkish. William Dudley from the New York Fed spoke yesterday and just said that again, running the line that sort of a Fed rate hike is becoming increasingly necessary basically, and this sort of rhetoric out of the Fed members is sort of suggesting that there is an increasing consensus that possibility of a March rate hike is on the table, and that has, as I said, impacted on the 2-year Treasury yield, and that has dragged the dollar higher again today. But it's funny because this is actually coming on the back of market was mildly disappointed actually, or underwhelmed I should probably say, by President Trump's lack of detail in his speech. Yes, the speech was fairly conciliatory, it's fairly just listening to some of the commentary on it, I mean, people are saying it's fairly sort of statesman-like, but it sort of still lacks the detail that the market has been looking for. Despite that, you've got equity markets in Europe which are strongly higher today, and it's markets are taking on a more of a positive risk appetite theme here. You've got the dollar yen, which is sharply higher. The yen is the big underperformer on the day. Gold is also lower, and as I said, treasury yields are higher, so that all sort of plays into this improved risk appetite, and the markets generally are pretty strong today. So what else have we got to look forward to? Well, we've got a lot of data actually today. We've got the first trading day of the month, which is always PMI's day, and we've already had, again, Chinese PMIs adding into that positive risk appetite, with the Cajun and also the official China PMI data beating expectations and coming in stronger, and that is certainly adding into this sense of positivity today. The Eurozone and UK data has not been all that great. The Eurozone data sort of mildly sort of lower on the final reading, and also UK manufacturing PMI also missed estimates, so not so strong on that regard, but certainly I think the market is still risk positive today. Now you've got German inflation this afternoon at 1 o'clock, expected to improve to 2.1% on both HICP and CPI, which are just two different ways of calculating inflation really. And then you're looking at the core PCE and PCE data, which is the Fed's preferred inflation data. Now PCE on a headline basis is expected to improve to 2%, although it doesn't show it on here, and core PCE around about 1.8%, so inflation ticking higher. That again adds into the argument that the Fed should be hiking interest rates. We've got the the Bank of Canada decision at 3 o'clock. That's expected to stay at 0.5%. Manufacturing PMI, the ISM manufacturing, expected to stay at 56. And then you're looking at the oil volatility around the weekly EIA stocks, which is expected to show weekly crude stocks again building 3 million barrels per day, and it's 3 million barrels of inventory build is a big improvement. A big increase in inventories again, and that would possibly be preventative of the oil price rallying. So watch out for that. But also the distillates and the gasoline stocks are interesting as well on that front. Now let's go to my chart today, which is the dollar CAD. Now dollar CAD has broken out to the upside. It broke out above this resistance band twice. It hit 32.10 and became the basis of resistance. Strong breakout yesterday, continued today. That's a sort of completed this little base pattern really, which you can argue gives you sort of 200 odd ticks, because that big historic support at 1.3 big figure held, and you could measure sort of 200 ticks of recovery. That suggests 134.10. But look at this next resistance, 133.85 is clearly in there. But the momentum indicator is certainly improving quite strongly now. Stochastics moving into positive territory or bullish territory, and the MACD lines as well. RSI above 60. These are all sort of bullish technical arguments. On the hourly chart, pretty much reflects the same sort of situation. Really strong move. Consolidation gets bought into. That's leaving us with support at 32.80. And anything that unwinds this hourly RSI towards maybe 55 to 60, I think probably should be seen as a chance to buy, because certainly this looks like a strong breakout and the market is going with it. So buying into any sort of corrective moves on dollar CAD, likely to retest this resistance from January, 33.85, but ultimately further gains possibly. You can see how this is generally still a bit of a range play, really, nothing too considered in terms of trend, so it's sort of pulling up towards the upper part of that range once more. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.